There is more than one way to skin a cat. As much so, there are many sides to trading the forex market. The forex market is hard enough, but you as a trader, you do not need to make it any harder. You need to fashion out a strategy that is simple and easily replicable every single day. Unfortunately, most traders believe that the more complex a strategy is, the more profitable it is, which is completely erroneous. So in this episode, I want to show you how you can use the daily candlestick wick as a very high probability area of interest that you can focus to take your trades on the lower time frame. Now, if you are interested in this kind of scenario, then you need to stick with me all the way to the end of this video, because if you miss any aspect, I can assure you, you are going to miss it all. Let me take you to the whiteboard and show you what I'm talking about. Take a look at these diagrams before you. Now, this is the daily time frame, and this is your 1H time frame. By the way, in using this strategy, we are going to be using two time frames. Like I said, we are using the daily time frame and the 1H time frame. You can as well use it on the daily time frame and the 15 minutes time frame. But high probability scenario will be daily time frame and the 1H time frame as your entry time frame. Now, once you find this bullish candle, the next day, as price is opening, you want to mark this close of this bullish candle. I told you the bullish candle opens below and closes above. Okay, so mark out this opening. Why do you have to mark it out? It is because when the next day candles open, you want to wait. As soon as the next day's candle now wicks this opening, this very daily candle, the previous daily candle opening, once it wicks, what you want to do is for you to scale down to your entry time frame. In this case, 1H. This is a very simple strategy. You do not need to wait on the daily time frame for this candle to form and close, because if you do, then you would have missed the early move that would have made you profitable in the market. So all you do is that the previous day's candle, mark the close of that previous day's candle, stretch it out, so that when the next day's candle opens, as it's opening, it will first travel back higher, all right, before coming back down. Now, if that happens, if on this day this happens, you are going to just go to your entry time frame, the 1H time frame in this case, and just wait. What are you waiting for? You are going to wait to see if there is any candle on your 1H time frame that will close below this very opening of this next candle. Okay, if it closes below, that is the catch. If it doesn't close below, you don't need to take any entry. I'm not talking about this candle here. I'm talking about this next candle to close below this candle that swept this liquidity here. You need to wait for the next candle to close below. If it doesn't close below, you have no trade using this strategy. I hope you understand what I'm trying to say. That is what you are looking for on the 1H time frame. Now, sometimes you may not see this formation on the 1H time frame. You will see something like this. Okay, this is the opening. This is the opening. You will see something like this. So all you need to wait for is for this candle to close below this very bullish candle on your 1H time frame. If you don't understand what I'm saying, I'm going to show you all of that on the chart. Okay, but please, this is a video you can watch and watch again and watch again until you understand what I'm trying to tell you. Now, so on the 1H time frame, how are you going to take the trade? Well, the way you are going to take the trade on the 1H time frame is that, for example, in this case, once that candle closes below, you will want to mark it out. So you want to mark it from here, or you mark it from here and stretch it all the way high. Let me just change this color here. Okay, so you want to stretch it all the way to cover this high and then give a buffer. Okay, that's going to be your entry. So you are expecting price now for the next candle to open and do something like this, come into this zone before you take it lower. Simple. Now, the minimum that you are going to be targeting here is 1 to 2. You can go as far as 1 to 5, depending on the structures of the market on your daily time frame. So that's one way. But if you have this pattern form, how do you take the trade? The same way. Mark out from this low to this high. Give a buffer to your trade. And you want to wait for the next candle to start forming and go into this before dropping. So if you have any questions, you can leave it in the comments. I will attend to your question if you don't understand. Okay? Now, let's get to the live chart and see how we can apply this to a live chart. Okay, so this is AUD USD. Now, let's look at what we have to do here. According to that explanation I did when we're looking at the diagram, I said pick your horizontal line. This candle is a bearish candle. Bearish candle opens above and closes below. Okay, so you mark out this close of this candle. The reason why you need to mark it out is that so that when the next candle opens, you will now know where you are. So let's use blue color for this. And now you also want to mark this low, this candle's low, because you want to see the next candle, the next daily candle sweep this low. We want to change that to black to give us differentiation. So you want to see this black line being swept, and then you want to see candle closure above this blue line. All right, so now that we have done that on the daily time frame, we go to the 1H time frame and wait for our H to play out. If it doesn't play out, we are not taking any trade. So this is the 1H time frame now. So, and remember, this is on the 16th of July 2025, I think so, 2025. So we need to start playing price. Okay, so candle has swept this low, but we don't know whether that is going to be the final sweep. The only time we will know is the final sweep is if a blue candle closes above this blue line. All right, so we continue. So you can see that's not valid yet. So you can see not valid yet. Not valid yet. Okay, so that blue line is valid now. So we can actually take our trade from here, and you can place your stop loss below here. All right, so because you need to be on the safe side of the market. So let's continue to advance price. This is where we are going to take our trade from, this candle, and our stop loss just below here. Very large stop loss, but it doesn't matter. We go for 1 to 2. So let's continue to see whether price will. Okay, we have been tapped in. We can actually frame the trade from here. Our stop loss just below this low. Give a buffer. Our TP will be 1 to 2. Okay, so that's 1 to 2. That's our trade there. So let's continue to advance price and see whether it will come our direction. Remember, we have been tapped in. Okay, so can we go to the daily, go to higher time frame to make it faster? Let's make it faster. Okay, let's continue to play it on this 1H. And boom, TP smashed. That's it. 1 to 2 easily. You can actually continue to trail your stops after that 1 to 2. Let's get back to the daily time frame and let me show you some more examples. Okay, so here is another example. Let's look at this. Take your horizontal line tool, mark the close. Remember, this is a bullish candle. It opens below and closes above. That's what we're marking here. Let's change this color to blue so we can differentiate. And now we also want to mark out this high. We need to see next candle come to take out this high. Very important. So we are going to use black for that. Okay, so that's it. Now we can go to the 1 hour time frame and wait for our H to play out. So this is the 1H. Let me explain what you are expecting here. You want to see the next candle. This one is on the 23rd of July. We want to trade on the 24th of July. Okay? Now, when the price opens on the 24th, we want to see price go up and sweep this high. All right? Once it sweeps this high, we want to see a candle closure below this blue line now. So let's continue. Okay, so we have a sweep. This is on the 24th, open here. Let's see, 24th of July. So we have a sweep, but we need a candle to close below this line. So let's continue. Boom, it happened there. So what are we to do? You have to take you need to take your trade from here. You can actually take it from this low here, from the close of this black candle, all the way to the high here. That's your zone that you want to take trade from. You can also take it from this wick here, whichever one. So let's continue to advance price and see what happens. So price has tapped us in, and we can actually frame this trade. Remember, this is not bulletproof, but it has a high win rate. So we can actually frame our trade from here. We want to go short, stop loss just above, and TP, go for 1 to 2. All right, so we continue to advance price and see what happens. Boom. Can you see that? I think it has smashed our TP. Let's see. Not yet. Just a little more. Boom. Can you see that? 1 to 2. Simple. Now, let's look at another example. We go back to the daily time frame so that you will know I'm not cherry picking. Okay, so bearish candle again. Remember, pick your horizontal line. Bearish candle opens above, closes below here. And now mark it out. Opening. Let's change the color to blue as usual. That's the opening. Also mark out the low of this candle. We change that color to black to differentiate it. That's it. Once you have done that on the daily time frame, what you need to do is to go to the 1H time frame. This is the 1H. So what are you expecting to do on the 1H? What you need to do is to wait for price to come and take out this black line, sweep it, and then go back to close above this blue line. Simple. So we continue. This is on the 31st of July. So we want to trade on the 1st. Let's continue. So price has opened on the 1st of August. We want to see it to come and sweep this black line. Let's see. Now it has happened there, but we want to enter our trade when it has closed above this high. So let's continue. Oh God, that's too much. Yeah, so this becomes your zone. And now you are going to target 1 to 2. So let's continue to advance price and see. Now we have been tapped into the market. So we want to frame the trade. Stop loss just below TP. That's 1 to 2 roughly. So let's see if it will go our direction. Now, maybe we should go to 4H and make it a bit faster. Okay, let's get to 4H, make it a bit faster. Okay, remember this is not bulletproof. Always remember that. So you can see how price is ranging, but you need to wait for it. You have already entered the market. I think we have recorded -1 here. Let's see. So price took us out here slightly. But let's continue to advance price and see what happens. This is a hard trade. Let's get to the daily time frame. I don't know. This is the kind of trade I don't like to hold for too long. I just want us to see whether it went our direction after taking us out. Okay? Can you see? It smashed our TP after taking us out with a little number of pips here. Can you see that? That's why we need to give a buffer to our trade. If we had given a buffer to this trade, we would have still been in the trade. I want you to understand that. This is a perfect strategy, guys. You can go over and over. You see numerous examples. Let me show you one more example on the daily time frame. Okay, so this is going to be the last example. I'm just doing so that you know I'm not cherry picking. Take a horizontal line, mark this point. That's your close of that candle. And then you also need to mark out the high of that candle. But we need to change that color to black. Okay, so now that we have done that on the daily time frame, let's get to the 1 hour time frame and see what happens. Now this is the 1H. So you want price when it opens. Remember, this is on the 16th of September 2025. So you want to wait for price to come and take out this high, this black line, take it out with a candle sweep, and then come back to close below this blue line. So let's continue. So can you see what has happened here? This is on the 17th. This is on the 17th of September. Now, this is a different ball game altogether. Why? Because this very one candle took out the high and then came back to close below this blue line. So meaning that this becomes your zone, very large zone. So you want to enter your trade from there, going down for 1 to 2. Let's continue to advance price and see. As you can see, we have been tapped into the market. So we can actually frame this trade to go for 1 to 2. To go for sell. So selling this market, just place your stop loss a little above, and then your TP roughly 1 to 2 there. Okay, so let's play price and see if it will go our way. Remember, we have been tapped into the market. Let's see. Are we still there? Yes. And eventually price has hit our TP here, right here. Okay, so that's the way for you to trade this market. Very simple, straightforward. You don't need complicated system. All right, all you need is simple, repeatable strategy that you can find in the market every single day, using the daily time frame and the 1H as your entry time frame. If you are new to our channel, please don't forget to give us your subscription. I found out that a lot of you just watch our videos and walk away. You don't give us your subscription. It's completely free. Please, I beg you, give us your subscription and then turn on the notification so that you can get updates from us whenever we post a new video. And if you haven't joined our free Telegram channel just yet, please do so immediately, because right there we post high probability trade scenarios. And if you want to take your trading to the next level, you can join our VIP community to learn more about trading. All right, guys, thanks for watching. I see you in our next episode.